Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. A lot of factors looking at this market trade today, including the fact that we've got some disparity. What's going on between the North and the South, especially when we talk about some definite tighter numbers in the North. At one point, are we going to have to see the pull? Remember when, I think it was probably 8-9 months ago, we had to pull some cattle from the South to fill what we needed in the North. We'll find out if that's even a factor. We've got a lot of cattle that are on feed this summer, and also big reports coming out this week that are not cattle related. We'll take a look at that and a whole lot more today with Brad Kooima. As you see, he's joining me on the screen. Brad Kooima is with Kooima and Varlick out of Sioux Center, Iowa. So let's start out talking about this disparity between the North and the South. What are you seeing, and how much of a factor is it going to be for us?
It's hard not to talk about cattle without talking about that because it's a record by quite a ways. The difference between the northern price and the cash price, and also what's way out there and is at record levels, also is what the basis is, the level of cash as compared to the futures market. The North, I believe, is extremely current. I think that the numbers are less than what the market so-called experts expected them to be. I think this whole thing starts back here in the wintertime where the weather was very mild. We pulled cattle forward starting there, and then the cost of gain further incentivized us to continue to pull cattle forward. You also had a discounted structured futures market where the futures market is telling you, hey, be careful. It looks like it's going to get worse. So that further made the feedlot stay current. And then the heat. I mean, it's been like a perfect storm here of influential news that keeps the market and the feedlot very, very current. I think there's some other ancillary things, though, too. Cattle generally, the quality of the cattle that are fed in the North is superior to the cattle fed in the South. Great. You look at the choice select spread still is what, $22, $23. That'll tell you that there's a shortage of choice and or there is still demand for choice meat. I think it's both. Another segment of that, I think, also is that the North negotiates for cattle. We don't just turn them in. We don't let the packer dictate what price is up here because we negotiate. Now that's a good bad deal because when it's really bad, we're the ones left holding the bag. But when the supply gets tilted our way and we get leverage back, I think that that's part of the difference in why the North is in much, much, much stronger hands than what the South is right now.
Was it about 8 months ago or so, Brad, that we were taking cattle from the South to fill some needs in the North?
Absolutely. It's happening now, too. Exporting cattle out of the South to the North. Now, one of the things, you bring up a good point because I was actually talking to a couple of trucking friends of mine. The cost of fuel is high. Obviously, I'm not telling anybody something they don't know. So some would say that, well, the reason they're not doing so much of that is because the freight's gotten so high. I'm like, yeah, but, so I get 148 today in a feedlot in Nebraska, and they're getting cattle about at 138 in Kansas. You can't tell me that it takes you $10 a hundred to truck cattle. Okay. So it's a factor, and I think it's happening. I know I was talking to this same trucking friends of mine that they were talking about. They were very, very busy hauling cattle from Kansas into a Nebraska plant. So the other thing, though, with that keeps them from just doing a carte blanche is that the quality of the cattle there are not up to the same quality of cattle in the North. So it's kind of a push-pull. I heard a story today about a set of cattle in central Iowa that got sold someplace out east that probably would be $8 freight. How about that? $150, and then the packers paying that much freight. So if one doesn't think that the supply of cattle, of good cattle up in this neck of the woods is abundant, they're missing it.
How long do you think this tightness will continue?
All summer.
Okay.
I mean, it's a contrast to when you're behind, which is more normal that we're talking about. We got backed up, and we don't like the price, and these cattle are kind of big, and if we could just kind of get real busy and get these cattle going for a month or so, we'd be out of it. And it takes forever because you sell the cattle that you should have sold 3 weeks ago, and by the time those are gone, you got those same cattle that you should have sold then. You know what I mean? But the opposite is true now too. When you get this far current, I mean, I've got multiple people that tell me that all of their July the cattle that they had scheduled for July, they're all gone. It's a whole month ahead. So unless something really radical changes, like say corn going to $4, which I don't see happening in the overnight. I think the guys are still going to be very incentivized. We're making a little bit of money here. They're going to sell anything with the tailhead and the brisket, in my opinion.
Well, those USDA reports coming out this week, I don't think we could see it drop that fast. But having said that, all those market influences that we're going to see beyond the two reports that we're dealing with this week, as we look into next week, do you see that as an eating away factor on the markets?
Oh, I'm afraid so. Now, the hog report, 2 o'clock this afternoon, civilized, gentlemanly deal. We'll have overnight to think about it. That they've done a better job of guessing these last hog reports. We're expecting a slight reduction, right? 99% pretty much. We'll see once if they don't, they've been doing a better job of guessing it. But tomorrow morning, after doing this long, I never feel as foolish as I do at 10:59 ahead of a grain report. I've ranted about this before. It's ridiculous. It's unreasonable. It's unfair. There's no reason why we have to have the report come out during the session. None. They can tell me that China wants to trade. Well, go ahead, make them wake up at night and trade then. Let's have the report come out at 7:30 when the markets are closed, so everybody's got a chance to react just a little bit to it. So we'll sit here tomorrow morning and we'll hold our breath, wondering if the USDA is caught up to what got planted. Wondering if they do anything with ending stocks. The last planting intentions report, Susan, was a real market changer. They dropped that corn acreage from out of nowhere, and we had a violent reaction in the future. So some of us have been waiting to see if they don't amend that just a little bit. The 2 row crops, corn and beans, actually it looks like, according to the guesses, that we're going to actually plant less row crops than we did a year ago. That doesn't really make sense to me. The reason I'm talking about it a little bit is because corn definitely has an influence on the feeder cattle price. It definitely has an influence on some of the deferred fat cattle prices, as well as if it's a real dramatic deal, it even impacts the short term on the cash cattle too. So a lot of traders holding their breath and probably going to keep one foot on first base. And then the whole 4th of July weekend, of course, is often a pivot point in the grain markets too, depending on what the market or what the weather sounds like coming on the back end of that.
All right. Well, finally, you did talk about 4th of July. What do we see for meat counter movement past this holiday as we work towards Labor Day?
I tend to choose the path of least resistance, or the path where if a ship's going this way, it's a lot harder to turn it around. And this ship of demand has been great, period. And it's kind of defied the odds, Ken. We've heard about this basically since the week after Mother's Day, that, it's going to be okay for a little while yet, but it's not going to stay here. We got high price gas and blah, blah, blah. And we got a 267 box. That's a lot. That's a packer that still can make a lot of money, and he's killing big. To me, the measure of demand is how much of it can you sell at how high a price. We're doing a nice job. And you've got some of the grinding meat is priced into consumption again, Susan. I mean, a $4 hamburger is very competitive compared to chicken and pork again. So I think, we'll probably back off the boxes some, like we always do this time of year, I think it'll still be better than what the crowd expects.
All right. Well, you have a good 4th of July with your family.
Hey, thanks. You too.
All right. Just want to remind folks that commodity futures and options do involve a substantial risk of loss that aren't suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.